Cool. Let some folks get in here. We'll get rolling. What is up? As you pop in, say hello. Let me know where you're located. Gonna be talking funds. What's up? What's up? Sorry about that. That's one of the things with traveling around. You like we just need to do a simple thing. It can take a while. Uh, all right. Got a few folks in here. Ed Bowler, thanks for popping in. That's really cool. We actually just bought a business in Phoenix that's in the finance space. So if you ever need to finance a deal, reach out. We'd be happy to help you out there. And I love Phoenix, despite the fact that right now it's getting hot. This is around the time, one of my partners is there. And I actually was just on a call with a client in Tucson. And that's one of the issues with if I ever did choose. Actually, it's funny. Yeah, there's just a lot of connections to Arizona right now. We've got a business that we're selling out of Colorado, where the owner of the business is mainly selling the business because they want to move to Arizona. And we just bought a deal in Arizona, and got a partner out there. And we've got another deal in Tucson. Cool. So yes, thank you for got time today. I got time to answer questions. So I figured I'd let a few people get in here. I meant to announce it earlier today, but earlier in the day was pretty busy. But evening calls were really light, so I wanted to take some time. It's been a while. A few of the last videos have been very quick to just kind of in and out, hear some information and getting out. And so wanted to let some people get in, spend some time on questions. I'll kind of intro and talk about our next fund that we're launching. It was a little bit from a conversation to today. You know, I was on sometimes, you know, even on calls, like the day was pretty busy. And so, you know, I was talking to a business owner in New York today, has a business doing about 30 million, or maybe they've done 30 million over the last few years. And, you know, really amazing product. But we're talking about, you know, he was trying to decide, do I want to go out and do acquisitions and leverage, you know, my IP is essentially it's his experience and everything, building a business from 0 to 30 million, or do I want to just go out and do a regular deal? So I can go out and just do a deal, or I can go out and I can start a fund and do multiple deals. And so I was just giving the pros and cons, because a little bit of that, it's not that everybody should just do a fund. It's just there's certain pros and benefits that you get from doing a fund. And, you know, there are several reasons that I wish I was everything that I'd ever done in my life was in a fund instead of just me going out and doing it. And then there are other people that it just makes sense. Okay, like based on your goals, you should really just go buy a business and run that business and eventually sell it. So I want to talk a little bit on funds, since it's been a while there. John asks, is being a credit investor the only requirement for this fund? Yeah. You know, like there's a we're not really publicly raising capital for the fund. It's more of kind of one of the GPs is very big in the real estate space. So, you know, he's just already got the investors. You know, we've already got commitments on some of the capital, and then we'll open it up to some other folks. But basically, we had a initial amount of capital where it's like, all right, until we get this amount, we're not even thinking about launching. So pre-launch, and you know, depending on who you are, it can change things. So if you're an influencer in the space, the biggest benefit to him being an influencer is that he has the demand. You know, he already had people that wanted to invest in his deals. So it's interesting, because it's kind of like me. Like, you know, I was just doing deal by deal, where I would go out, do a deal, have people invest in that deal. Some would do incredibly well, some wouldn't do as well, and it was kind of luck of the draw. And so the upside to a fund, and you know, one of the reasons that it just makes more sense is that now you get the overall benefit. You know, that's why when we go into a fund, we can get this 300% return. It's not that it's 100% win rate. You've got some that are going to lose, but when you've got you know, some that are going to major win, it's the same reason. Like, you know, if venture capital, like nobody would be in the venture capital game if every investor had to choose deal by deal. So, you know, it's just a similar thing where those winners can make up for losses and all that. And so that was one of the benefits. But now, kind of the same thing for him. It's what I realized when I had the real estate franchise 15, 16 years ago. You know, kind of putting the funds together and then going out and doing deals has a lot of upside. All right. Got see Boston popped up. We'll go through some of these. So I want to talk about this fund, and that's a great kind of segue in here. And then we'll get into some of y'all's questions and stuff. So my first kind of experience with a real estate fund in particular was years ago when I had a franchise. We bought and sold a lot of houses. So I bought that business, ran that business for 3 years, exited the business. And over the course of those 3 years, we bought and sold over 100 houses. I mean, it was like 115 or so. How well, I say houses, some of them were even multifamily, nothing bigger than a quadplex. So it was a lot of units, but we bought and sold over 100 different pieces of real estate. And part of my learning process over that 3 years was, okay, I could go out and try to get money for every deal. Real estate is one of those things that is high capital intense, and you just don't get the return that is anything attractive if you're not using some level of leverage. If you're just using straight cash, the ROI just isn't as attractive. And so most of the time I would go out, I would raise capital for a specific deal, maybe get some hard money, bank loan, individual investor, partner, equity, whatever, and then exit that deal, pay everybody out, whether it's interest, percentage of profit, whatever the deal was on the front end. So exiting each one of those would free up some capital. Now I could go to the next deal. There are pros and cons to that. The biggest con was there's a ton of work. You've got to raise the capital for each individual deal, then exit out of it and free up that capital, or go and raise capital if it's not freed up for the next deal. So that takes up a lot of time. And if you're trying to create deal flow, trying to work on the deal, trying to manage contractors, trying to find a buyer, all those things are at the detriment of you trying to go out and raise capital. The other part, though, is allowing the investor to get exposure, like I was just talking about, even in the private equity or venture capital space, allowing that investor to get exposure to a lot of different investments. So instead of that person winning or losing based on that particular deal, when they invest in a fund, they get exposure to all of these other deals. The other kind of benefit for the investor was just being able to act very, very quickly. As any folks that follow, I know I've got a bunch of real estate investors that also kind of are interested in private equity space, but that the speed of closing a deal is everything. We have a little bit more time when it comes to businesses. Number one, because there's not a ton of competition when we're looking at a particular deal, so things move a little slower. When it comes to real estate, you could talk to the seller that day, and if you're not able to close very quickly, and somebody else comes in and say, "Hey, I can close tomorrow," I've looked at the title work. I got my title company already working on it, and they're writing up the paperwork. I already have the cash. Don't have to get a loan. We can close on this thing tomorrow. It literally helps you win deals. So there's a ton of benefits, but those are just four. And it's literally is the same thing, even when you're on the business side with a fund. If you're somebody who's trying to compete with somebody else and buy a business, and that you've got the cash in the deal, and that other person has to go through, especially they're going through something like SBA, they're having to raise capital, a lot of those the things that are just even a regular bank loan. It takes a long time to get that stuff done. And so when you can come in with cash, it makes all the difference in the world. So it's literally just a competitive advantage. And so in talking with our partner, In this fund, those were kind of some of the benefits that we went through. We basically just spent a day together where, he was basically trying to decide like, hey, is this fund something that I want to do? And so, he brought me on basically just figure that out, and what does the fund look like. And, I was impressed enough by what we think the returns will be to basically say, hey, I'd be a GP and we can partner on this. Now, one of the things that I'm really excited about is it's in the mobile home space. So, kind of weird. I know a lot of people never heard of like a fund that's going to specialize in the mobile home space. But basically, when we looked at like where, number one, funds are just like any other business. So it's like, where is there the least competition? First of all, where are there the fewest people playing? There's the whole blue ocean theory. I'm sure a lot of y'all have read the book. But the second part was we're going to get massive returns. Now, those two are related in some ways, but getting massive returns is one of the most important things for me, because I feel like especially when it comes to micro funds or getting started into anything in this finance space in general, to get into the space to try to generate a 15% return, I don't think makes a lot of sense, because I can go to somebody who's been around for years, has a 20-year track record, and that can generate that kind of return over time. So I think in order for you to be attractive as an alternative to those, people are going to put the lion's share of their money into those, and then put some of their funds into a smaller, or a new startup fund, and that's supposed to be kind of their risk money. And so you want high returns that correlate with the risk that you're taking by taking a chance on this smaller fund. So that's one of the reasons that we're focusing on the mobile home space, and just based on the deals. We looked at the deals that he has done and is doing, and some of his students and his network are doing, and it also lends itself to being of benefit when you have cash. So, the other part of like what you're trying to figure out is, where can I play where cash is a benefit to me? If you're a fund and then there's a bunch of other funds and everybody has a bunch of cash, and that's not, if you're going into the multifamily, which, I invest in some multifamily funds, shout out to Noah and the homies over at Freedom Real Estate Fund. Like I love being a part of the of real estate in general. So I'm part of some multifamily funds. I'm a part of some single family or one single family fund, multiple multifamily funds. But even for me, like, I had never been pitched a mobile home fund. I get pitched real estate funds all the time. So that makes it interesting. And then being able to go into those deals, offer cash, which is a big benefit, because it's difficult to get the regular financing. It's a lot tougher to get traditional financing when it comes to those deals. So you have all of these things that come together to create a unique opportunity, which is why we decided to go into that space. So very excited. We're getting other GPs together. They've done a really great job of filtering out and just getting some amazing GPs that have some experience, that are kind of spread out across the U.S. And we're going to be doing deals all over the U.S. So just wanted to share that news. Very excited about it. And just to say, if you're somebody who's interested in being a part of the incubator, I don't talk about it as much because we've got a lot of people that have reached out. So, we're just being very, very specific about the people that we're putting into the funds. And now we also have people who were part of previous funds that are now starting are in incubating other funds. And so that's why I haven't really been pushing for people that are interested. But feel free to reach out, ace@acechapman.com. You find more out about the private equity fund incubator at acechapman.com. All right, let's see what kind of questions y'all got in here. Easy Money Mello showed up. Thanks for popping in. He says, "Yo, what's good, Ace? Good to see you, homie." Tam says, "Awesome, working on my fund. Good deal. That's exciting to hear. Tell me what kind of fund it is, what you're working on, what's your target, how much you're gonna raise. Give me some of the details, Tam." As there's so much going on here. Yeah, out in Phoenix, man, it is. There's a ton of opportunity. I just feel like there's a ton going on in a lot of really cool cities. We're doing a deal in Houston right now, and it's surprising how cool a city. I mean, you never hear much about Houston, and so it's surprising how cool a city Houston is. If anybody is in Houston, reach out. I'm spending a lot of time there close to getting this deal done. Victor says, "What's up, Ace? Boston, Massachusetts." Yeah, Boston. I spent a lot of time there. I dated a girl that went to college back in college days. I was, love will make you do crazy things. Victor, I was like all the way upstate New York, coming down to Boston on a train. It took forever, but I also had a best friend that was at UMass there as well. Tim says, "I have." I don't know what I was asking. Okay, fun. You're raising, I guess, a fund for data centers, rentals, and so forth. Cool, cool. Why? Okay, this is a great question right here. Let's talk a little bit about this. Why a fund versus a syndication? So one of the biggest things, and one of the reasons that I wish, when I go back, one of the reasons that I wish I had a formal fund is because of the additional work that goes into a fund. Quite honestly, syndications are easier. You can put together a syndication. You've got multiple people. The legal structure is a lot easier. Typically, you're going to do a syndication on a single deal. So this is what I was talking about earlier. When we're raising capital, but syndications, they are basically saying you're presenting them with your prospectus, the specific deal or group of deals that you're going to do. So let's say, you found a package of 10 houses. You're going to buy all 10 of those houses from an investor. Here's all the specifics. Here's how much money we're going to put into the deal. It's how much we expect your return to be. Here's when we're going to exit, and you're going to have all your money back. And so it's great, and it's a great way to get into doing deals. Like if you're somebody, one of the things that I think is interesting about funds is like it's at the end of the day just a trust vehicle. So these people are basically trust you with the funds, and then you're going to go out and you're going to invest them and get a return. When you're doing a syndication, that's one of the ways to basically build trust. So if you're somebody that doesn't have a big track record, you can use syndication to build trust, or obviously you can just do a syndication and make the money and not worry about leveraging the trust into a fund. When it comes to a fund, you have a lot more work to do. There's typically the legal cost is going to be a lot more substantial. And then you've also got just the oversight. You've got auditors that are going to come in, and so even that's a cost as well as an additional amount of work. So, so that's the downside versus a syndication. The upside, though, is number one, those funds are just sitting there. So instead of selling them on, hey, here's the deal we're going to go out and do, you're saying, hey, you're going to invest in this fund. Here is this is the fund structure. the money just sits there. You're not just syndicating the money to go into a deal. You're literally, it is the fund, it's literally the fund's money. If you're thinking about just a technical difference between the two, for that syndication, it goes directly from their bank account into the deal, and now they've got a piece of that deal. For a fund, it goes from their bank account to the fund, and now they have a piece of the fund, but you control the fund. So you can do what you want with that money. There's a great scene in The Big Short where the investor, has lost a ton, like things look terrible. His investors are coming in and they're like, dude, you got to get out of this investment. He was looking completely nuts. And he's like, nah, I'm staying in. And like, they can't do anything about it. He's the manager. He has a fiduciary responsibility to do what he thinks is right for that fund. So the benefits to that structure are you can take that money and invest it into the deal and into deals as you see fit. You have control over it. Having the benefit of not being at the mercy of raising capital for every deal to do that syndication. You can do a deal. You've got the cash. You go out, you buy that piece of real estate, that business. You sell that business. It comes back into the fund. You can go out. You can do that again up until the end of the fund. So that is really the basic difference there. Very cool. So Tam says, and we'll get out of here. Fund is targeting 20 million. That is great. So doing tech training, real estate fund, similar to Nanban Fund. I hadn't heard of that. I'll look that up and check that out. Nanban Fund. Very cool. All right. Thank y'all for popping in. Great combo, great question, especially that syndication versus fund question. I'm glad I was able to get into that. Thanks for bringing that up. Everybody have a great evening. And, fun for me, fun to get into a little boring fun talk. Check out acechapman.com. Hit me at hit me at ace@acechapman.com if you're interested in getting started with your own private equity fund. Talk to y'all soon.